Welcome back to the funding table. Today, we're going to talk about what everybody's been asking.
The market crash.
Dun, dun, dun. We're going to be talking about the market crash. For the last several years, we've heard buyers say, I'm going to wait to buy until the market crashes. Or I'm waiting for interest rates to drop. Or I'm waiting for sales prices to drop. But here's what nobody is talking about.
And those people are still waiting.
Yes.
They've been waiting for years.
Trying to time the market never works. It doesn't work in stocks, it doesn't work in real estate, and it doesn't work out when you're trying to open up a business. Because by the time that you realize it's the perfect time, others also realize that as well.
You see, most people, if a crash or when a crash happens, they think this is going to be the best time to buy, but that's not always the case. If a true crash was to happen, many people might lose their jobs and not even be able to buy.
Yeah.
So there are things that could keep you out of the market at that time. Lending guidelines might tighten. It might be harder to even get a mortgage in order to buy a property. Maybe if you're a cash investor and you got a ton of cash reserves, maybe that would work. But if you're a first-time home buyer, second-time home buyer, you might not even have enough reserves in the bank in order to qualify or to prepare yourself. Your savings might have been completely depleted due to a crash, people losing their jobs, not being able to afford this and that. Not too many people at that time are thinking, hey, let's buy property. Let's buy an expensive asset like property.
That's so true.
I mean, I could attest to that, when it comes to investing. There may be a certain particular asset that I'm looking at and I say like, hey, when it comes down to this price, I'm going to buy. But then when I see it come down to that price and then maybe even continue lower out of fear, sometimes I sit and I wait to buy,
Yeah.
And by the time that I've waited, the recovery may have happened. And now I'm back into certain price points that like I could have bought at, before it crashed. And so it's not always as easy to time the market. Doesn't really work out for most people. The market is, it's like Vegas. You're gonna go and maybe you'll win a little bit here or there, but most people leave Vegas losing. So, consider those things. It's not just an easy, I'm gonna sit and wait, and when I see that happen, it's gonna be the time to strike. You might not be fast enough to move. There might be people and investors that have a lot of cash. They don't need to worry about banks. They may be able to just quickly get that money and quickly buy up properties for investments, and you could be their renter. Consider that. It's not as easy as ABC.
Yeah, I think people think that it's going to be just as easy to buy a house whenever this market crash happens, right? Like it is right now to purchase a house, where you're seeing a lot of incentives happening and stuff like that, where you don't necessarily need a lot of money to purchase a house. But in those times, like Sammy was saying, you're going to need to be super ready to purchase a house. You're going to need the assets. You're going to need the credit score. There's not going to be any time that they're going to give you because people are going to be outbidding one another, right? So
lending guidelines might have changed.
Yeah.
You might not even be able to. There might not even be a program available for you to put 3 or 5% down. Who
Right.
knows?
Yeah.
Some people automatically associate a crash with lowering interest rates, and maybe that's the case, but at that time, maybe banks are over leveraged, and in order for them to lend money, they're going to be lending at higher rates. You don't exactly know what the circumstances or the future market may look like. So why gamble on possibilities if you're ready now? Think about that.
Yeah, and buyers are forgetting that right now in this market, houses, like listings, are sitting on the market a lot longer.
3, 4, 5 months?
Yeah.
It's crazy.
Even new builds are sitting on the market a long time.
I've seen new builds sitting for more than 5 months.
Yes. Price reductions are currently happening. Builders right now are offering crazy incentives. Sellers are offering to pay for your closing costs. Even to help you buy down your interest rate. Right now is a time to make a deal happen. So sellers are coming to the table, buyers are coming to the table. Right now, you as a buyer, you have the leverage and you can get what you want when you're trying to buy a house.
Sellers and builders in many situations need to sell. And they're a lot more likely, like Rosie said, to come to the table. They're willing to, do what it takes to sell the property. You might talk the price down a bunch. You might get some concessions. They might say, hey, we're going to build a fence for you as well, too. Whatever you want, we'll throw it on top of that.
Yes.
They want to sell, and, they may be in a position to say, hey, whatever it takes, let's sell.
Yeah. Imagine when there's 10 people looking at the same property. You're talking about waiving your inspection rights, right? You're talking about overbidding on the price, having to pay all of your closing costs, and if you want to have a lower interest rate, paying to buy down your interest rate. So right now, you as a buyer, you have the ultimate leverage, and I think that's what a lot of buyers are forgetting right now. Either they're forgetting or they're just unaware of how much they can get right now as a buyer.
And at that, let's say, the market crashes and, investors come out, a lot of cash buyers, if somebody needs to sell their house and they know how shaky the financing industry is, banks might be tightening guidelines and lending a lot less frequently, or there may be more loan fallouts. And if that's the case, they're going to be a lot more likely to take that cash offer, even if it's a little bit undervalued, because it's cash and it's like a for sure thing. Mm-hmm. So there's just too many moving factors just to say, I'm going to wait for the crash. What I say to that is, good luck.
Yeah, we've been waiting too.
And I know what the big obsession is. Everybody's talking about it. I hear it so frequently. It's interest rates, interest rates, interest rates. Mm-hmm. And I get it, I get it. As a homeowner, as an investor, I understand. The cost to borrow money is a big thing. It could determine whether you're being able to buy a house or you're not able to buy a house and you need to rent. And so what I want to say is that the headline rates that you see out there on the market or in the news, that's not always the rate. The rate that you might be getting from your current lender, that's not always the rate. Some people think rates are high because the type of lender that they're working with. And, they may feel trapped working with that lender. And so, yeah, I get it. Rates are high for you, but they're not high for everyone. And that really depends on the kind of lender that you work with, one. And two, there's all kinds of incentives out there right now to help you even get a lower rate, or maybe help you get some lender credits to make things more affordable for you at the closing table. So what I would say is the headline rate that you're seeing is not always the rate. The rate that you might be getting from your current lender is not always the rate. You don't know how often I see, hey, what's the rate? And then I give them a general quote and they say, whoa, that's not what the other lender was quoting me. Or sometimes 1% or 1.5% higher. And no wonder you think rates are high. You're working with the wrong team.
Yeah.
No wonder, you're concerned about your monthly payment, because your lender that you're working with is offering such high, ridiculous rates, and they're making a lot of money on you, and you end up paying for that over 30 years. A 1% difference rate could be $50, $70, $80, $100,000 in interest over the life of the loan. So it's not some small little thing that we're talking about. And so, you may be caught up in the whirlwind of rates are high. That might be because the lender that you're working with has high rates, or the lender that your realtor recommended you to has high rates. And, that's just unfortunate for you. That's where you gotta educate yourself, reach out, get some second quotes, get some second opinions, and really compare, because people are shocked when they see, oh, you're offering an interest rate that's way below the national average. And there are lenders out there that are consistently below the national average. And then there are lenders out there that are consistently above the national average. So not all lenders are the same.
Yeah, it matters who you work with.
And what I would say more important than trying to time the market is finding the right team to work with in the specific market that you're in. You could be in a crash, so to speak, but working with a super high interest rate lender, working with the kind of realtor that may not negotiate with you, working with a builder that, may not want to negotiate with you or kind of give you the fixings here and there. They may say, take it as it is. I'm not going to do anything else to it. And you might be leaving a lot of money on the table at that point. Whereas working in a market like today, where prices are coming down some and rates are pretty low depending on who you work with, the right team can maximize your savings in many ways, on the negotiating skills, on the financing side, strategies, loan programs, you name it. So instead of trying to time the market and, be the Wizard of Oz, so to speak,
right.
I would spend that much more effort into making sure you're working with the right team, because I've seen it, whether it be locally, whether in other cities. We do financing outside the city as well. And, whether it be in different cities or locally, I ran into the people in the market that aren't really trying to get the best for the client. They're only trying to get the best for themselves. And then I've ran into people that are trying to get the best for the client regardless, even if they have to take a hit. And so that's why who you work with can be more important than when you decide to make the move. And if you're ready, then find the right team. That's going to be your ultimate maximum savings.
Right.
Not waiting for the CNN news headlines. You know how long that can take.
Yeah.
I got people and clients that are still waiting for rates to go back into 2%, and they've been waiting for 5 years or so.
And that house that they were looking at went up by $70,000. So
Easy. In every market, there are people winning. In every market, there are opportunities. But like I always say, and I've been hearing others start to say too, it matters who you work with. And that's one of the biggest takeaways I would share with you. So if you're learning anything from this, it matters who you work with. And if you're ready now, you're ready. If you're ready in a month, you're ready. Don't wait for a future that might not come.
And remember, if you're waiting to time the market perfectly, waiting for rates to drop, prices to change, you could be waiting forever. Don't just wait until social media tells you it's the perfect time. When you're financially prepared, have the team to work with that can strategize and get you the best deal is when you should be in the market to purchase a home.
Amen, sister, amen.
Remember, markets change, rates change, and opportunities change as well. But having a plan is always better than just waiting and hoping. We'll see you guys on the next one.
Home mortgage, baby.